Mm.
We're recording. It's April 1st, wrong. It's April 2nd. Guys, so this is Lance coming to you live from Wheels Up, the Wheels Up studio. We're here on Keys to Home with Jennifer Weissman with Benchmark Realtor. She is Benchmark Realty. She's a broker, a move manager, an organizer, a mom, a friend, superwoman. And then we've got Mark Trader with Aspire Coaching. You might know him with Cooking with Trader, financial advisor, got rocks, and then my loud mouth and my all this stuff.
Keys to home.
Hey, welcome everyone, coming to you live from the studios of our own remote locations.
Ta-da.
I'm Mark Trader with Aspire Coaching, ready help to serve and help you, guide you. We've got Lance Stammeier from Tennessee Mortgage Guy. Jennifer Weissman is from Benchmark Realty. We are here. The second quarter, I'm going to launch right into it because I have tons of energy. The second quarter of 2026 launched. It has started. I am on my own journey of doing a 90-day sprint. I do this with my own method every so often, just as a checks and balances to remind myself from where I was, what I was doing in my debt-free journey, and to challenge myself. I'm on a path. Second day into saving $3,000 over the next 90 days. I'm going to turn it over to Lance and Jennifer. Jump right in. Let's get this started. Let's get this 2026
What are you doing
going.
with the 3,000? Because it doesn't matter if you do it if you don't know what you're doing with it, does it?
Great thing. Here's my purpose and that's a great segue into just because you set a goal doesn't mean it means nothing. Okay. Right. I'm probably going to get blown up for that. Setting a goal is just, I can set a goal any day of the week. You know what? Today I want to go run 81 miles. That's a goal, but that ain't going to happen because I have no system in place in order to achieve that goal. The hard part about achieving goals is not setting the goal. It's the system, having the system in place to get you to the goal. That is the heart, the meat and potatoes of reaching a goal. So to answer your question, I am saving $3,000 because I'm going to spend $1,000, I'm going to save $1,000, and I'm going to give $1,000. That is the purpose behind my. That is the purpose behind my 90-day sprint.
Have you determined who you're giving it to and what you're spending it on?
So in my life, yes. In my life, pets are very important. Yes. They've always been a part of my life. So the $1,000 is likely going to go to rescuing animals of some sort. But I may, try to provide or use these resources as a blessing for multiple purposes in charity. I'm going to spend $1,000. Quite honestly, I love remote controlled trucks, and I am going to tap into my youthfulness and buy myself a new remote controlled truck. And how about that one?
I have a friend he's a pilot, but he also he's in some hobby club where my wingspan is the smaller planes that they fly remote control. So that's craziness. Let me share something too really quick that happened this week. I'm a realtor, obviously, but I do the move management. So I had a move management client yesterday, and it's hard. You're going to be in a bad emotional situation a lot of times when a move manager comes in. This was a brother who is taking care of his sister. I don't know if either of them have children, but thank God they have each other, and she has him. But it's hard on everyone. But I was talking to Tim's sister because we're emptying out the house in Ohio, getting ready to sell it, their parents' home, and his sister does not have heirs. And she was talking about where you have to do a will but you now have to update your will because you're going to have a different situation. And we were just talking about different things, and she loves animals as well. And we were talking about giving it to the local humane society. And he said, and this is a decent chunk of money. But I said, the other thing is you could potentially set up an endowment to help pay for part of somebody's college who's going to school to be a vet or a vet tech or something like that, even if it was just to pay for books or something along those lines. That's paid from the interest that you've invested and earned. So she's like, really? And then the other thing, she for some reason didn't know that you could, even if there's nothing circumstantial that changes like housing or anything else, that you can change your will just because you want to. And I told her, I said, you can set this up now as this, but if in a year, 5 years, 10 years, you hear of a different situation that you choose to give part or all of your money to, then you can do something along those lines too. But even people without heirs need to determine where their assets are going when they're no longer here. Otherwise, guess who does?
The state does. So real quick, you actually, go ahead, Lance. Jump. So
one of those stories. We'll talk about it sometime.
Yeah.
Jennifer touched on. You just laid out exactly what is in my will. Quite honestly, pets and pets are very important to me. So inside my will, I have when my assets are sold, and anyone wanting to know if how to set up a scholarship, just go out to your favorite search engine and type "setting up a scholarship." But what portion of my assets are sold, and it is designed to set up a scholarship for people that are in veterinarian school that are at least 3 years into that schooling. And part of the criteria for my scholarship is you have to have a 3.5 or higher, third year pursuing or working with animals, at least 80 hours of rescue
volunteer work,
and that's what's laid out in my will. We have a lot going on, guys. I mean, as you can tell, my energy level is spiked. It's high. It's because, as I said, I started my own 90-day sprint using my own company's method that my clients use. And the other thing is, in my business, if people don't know right now, it's starting to happen. People are starting to receive notices. March through April of 2026, the SAVE plan was dismantled. It is coming to an end, and people are now starting to receive letters from their student loan as part of the student loan providers that your IDR program that was part of the SAVE plan is coming to an end. You have a choice to make, but the monthly payments are going to start ramping up. And I do know of one person right now that has already received letters that they need to start looking at choosing an option to start up their student loan repayment. So it's an effect. That SAVE plan is affecting 7 million borrowers.
Yeah, that's not, so people do need to be getting on board and taking care of with a lot of things. And that's what I was thinking about when you were talking about onboarding another client. That I've got contracts picking up. I think that the lull that has been in the economy in the last 6 to 8 months, a lot of people were sitting back. I think Lance is trying to fix some tech things. I think a lot of people were sitting back and going, I need to position myself to either deal with this as this is the new reality, or to be ready if things shift back to a better place. I think that's what we're seeing with you onboarding people, with me picking up clients. Lance is getting more apps. With Lance, tell us what's been going on with you, and then you get to tell us a lot of fun things. We're doing myth busting today, right?
Yeah, can you hear me okay now?
I think so, yeah.
Yeah.
Yeah, it's been really busy. It started Monday and Tuesday. God, we need some makeup. We need makeup in the studio here, guys.
Right?
And I'm not. My blood pressure is not this high as this shirt, so I don't know what's going on. If I look pink. Anyway, on Monday and Tuesday, against all odds and against all conventional thinking, all of a sudden we got a lot of apps coming in. I've submitted 4 loans in the last 24 hours. Got another one I'm submitting this morning. Just had a loan closing while we were talking. Someone called in and said, thanks for making that happen. I've helped that family for almost 20 years now, so it's really awesome. Yeah, apps are up. It's really wild. Interest rates, I've said this before. People can get used to high interest rates. They can get used to high prices, but they can't get used to uncertainty. Maybe we're getting used to uncertainty. People are starting to take action during what looks to be uncertain times, but maybe there's an undertow, there's a subliminal communication that everyone's like, things are going to be all right. But I'm telling you, and Jennifer might, I think she'll back me up. Mark just said to me as well, he's got new clients. People are taking action. I don't know if it's the spring weather, but they're taking action.
I think a lot of people were fed up and they're like, okay, I got to deal with it. This is what it is. I got to do it.
And live, right?
Yeah.
I spent 2.5 hours with a client last night. Work and this is what the level of service that I'm wanting. I give my clients. We sat for 2.5 hours. We walked through her bank statements, building her budget. She embraced the 90-day challenge that for the second quarter that I put out as part of a social media post, and we spent 2.5 hours working through, laying out what were her challenges prior to us meeting. What was she hoping to get and out of the next 90 days? What was she willing to sacrifice? And so I say this all the time. Tapping into one. If for all of those people out there listening, okay, I say that all the time. I want you to sit down. If finances and your relationship with your finances is rocky, and maybe you have a spouse that's not on board, or is you're butting heads with your finances. I want you to sit down and ask yourselves or yourself one important question in regards to your finances. And that question is, what is the most important thing to you? Yeah. Ask that question, because once you answer that question, it's not hard to say no.
Right. Well, and if one of those things is buying a house, I wanted to have Lance talk today too about all the myths that are out there. Oh, I can get you a 4% rate, a 2% rate. Oh, you don't have to make any payments for 6 months. Oh, you have to use the builder's financing. Tell us some of the things that you run into that people come to you and they're like, yeah, Lance, you're a great guy. And so-and-so told me to check out with you, but look, can you do this? Tell us some of those stories, because I know you have tons of them from the years in the trenches.
I wish I had anti-glare on these puts. Maybe these are better. Those are better. Yeah. These are the mark versions. Can you okay?
Yeah, I'm going to mute and see what that does for me too.
Okay, I can hear me now. I just can't hear me.
I can hear you. You're just a little muffled still. You need to be in on your mic, I think.
I left the mic.
No, the built-in.
How about now?
Yeah.
That's fantastic.
Yeah. Can you angle your computer to be there? Sorry.
Yeah. So did you guys hear about the computer with
right?
Stuff.
Yeah.
Well, so, also thankful for me, it's now baseball season and basketball season is winding down because I don't like basketball season.
Yeah, I'm not a big basketball fan.
But baseball I enjoy.
Hockey season, hockey for me, I'm a hockey fan, and that is ramping up. I'm watching pretty much three to 4 games, each time.
Yeah. Can you hear me okay?
Yeah.
Yeah.
You hear me now?
Yep.
Yeah. Can hear you.
Okay. Jennifer?
Yes.
Okay. All right. So things we've been hearing. So I listen to a lot of talk radio because I'm a crazy writing kook, right? So I listen to talk radio. I happen to like to listen to people's different views, and I like people listening to the arguments that people call in. And yes, for everyone watching and listening, I listen to both sides. I watch all media and take in all considerations because I deal with people from all walks of life, and I want to be able to understand points of view. That's how I was raised. I wasn't raised just this way. This is the only view. So anyway, for the non-political statements moving
That's such an
forward.
Ohio purple state answer, but yes, I agree.
Yeah. So okay, this is a funny one. So a lot of things that people are hearing right now is they're getting advertisements in the mail, from people that have things on them that say lowest rates in 3 years. And that's right. That's a Lance Stanmeyer media buy. It's my number one. This is the number one way I get business is postcards because I have about 800 clients that I stay in front of, and I just send them. This is some funny AI of downtown Nashville and skinny me. No, do I have a hat on? No, I don't have a hat on. And I did this. I had to design it in middle of February to get it out for mailing at the 1st of March. And right there, I had it all done. And right before we went to press, so to speak, interest rates, it was February 24th to March 3rd, where they were the lowest in 3 years. And it looked like, oh my gosh, it's finally happened. So I called the printer and I said, put that little star on there, and out it went. Well, guys, people are calling. People know the interest rates have gone up for the most part. My clients do because I keep them informed. But on the radio right now, your media buys, they still are saying, hey, call today. It's the lowest rate in 5 years. Call today for a 3.5. And these are big companies that people know. And even though my customers know this, they still call and say, why am I hearing that? And so I have to talk about, media buys are done out a little bit in the past. And it's great this time because I can use an example of myself in explaining that. So it's basically, some people will call it bait and switch. I'll call it setting the hook. It's getting people to call, getting people's attention. Oh, it's the lowest. Okay. Well, here's some facts that are relevant. For the first time in history of the last 6 years, there are more people that have an interest rate above 6.5 than those that have a 4% or less. So we've started to see the shift from everyone sitting on their mortgage saying, I just can't, I'm not leaving my 3% mortgage. There ain't no way in the world I'm going to leave that 3% mortgage. I'm never going to move. But they're starting to realize that, guess what? People change jobs. Things happen in our lives. Debt gets rearranged. Maybe an unexpected debt happened that you didn't know how to deal with. So they're having to move things around. And if they were talking to Cooking with Trader in the middle, they'd have a better plan. They wouldn't have to get into the mortgage. But unfortunately, most of you viewing, you need to be calling Mark and get it straight because most people aren't, and they use their mortgage, their house as a bank. So we're starting to see that shift. We're also starting to see a lot of people purchase. Jennifer's got several purchases going right now. We've got a listing under contract right now. So things are starting to move. So that's the number one thing I always think of is it's the lowest rates in 3 years, and it could be the highest rates or the lowest. They'll still be saying that because it's a good bait line to put out there and get the bobber to react. Have you guys heard that before?
Yeah.
Jennifer, you hear that? Billboards, TV. Okay, I'm not going to name the name of the company, and that's what I'm going to talk about next. And I've got a little slide prepared, but one of the biggest mortgage companies in the world, just don't say the name, sponsored March Madness.
Yes.
So if you're a basketball person, you've been watching, their ad came up every 30 seconds. At the timeout, here came their ad. Well, little did people know, or maybe some people noticed it, my clients did, their phones started to get messages too, especially if they were talking to Lance about a potential mortgage. Especially if that said mortgage company was servicing their mortgage. So I had a few of my clients that I closed last year in that highest in 5 year range that were in the 6s and 7s. That were watching the Elite, the 16,
Elite 8, Sweet 16, Elite 8. I don't like it. I know it.
Yeah, they're like, Lance, I just got a text from Mortgage, and they're like, what's going on? It's like they're watching me. I'm like, well, they are. They spent $1 billion this quarter on marketing. And marketing isn't just throwing something on a billboard anymore. It's not just throwing it on TV. They're using smart TVs. They're using metadata. They're using YouTube, LinkedIn, StreamYard. They're listening and watching for everything. And the keywords are mortgage, save money, rate. And if that happens, your phone is a conduit, or your email is a conduit for which they can reach out to you. So during the last 2 weeks, I had a phone call from one of my top clients that I've had I have this list that I keep of everyone from last year that, like, gosh, it's like a no-brainer. As soon as the rates get to a certain point, it's just a no-brainer. And in that period I was telling you about, back at the end of February, early March, he was like number 9, and I was working on number 8 when we attacked Iran. All right, but in the meantime, last weekend he calls. Not this past weekend, the weekend before, he calls and he's like, "Hey, mortgage is really on to me. They just texted me at 11 o'clock at night.
Yeah.
They're like, hey, we see you're watching the game." Imagine that, right? And if I'm here right now to work with you. I'm a tier 3 so and so with such and such mortgage. And by the way, if you call me right now, I'm going to lock you at a 4.875. I'm doing it for your neighbors. I'm doing it for everyone. You've got to get on board. And that person, my customer, called me. He's like, Lance, what's going on? And we talked a day or two ago. I'm like, I'm gonna call him Al. Al, I'm gonna call him Mark. Mark, it's not possible. It's not out there. It would cost you tens of thousands of dollars in points. I'm not paying that. And I'm like, well, I wouldn't want you to pay that. But hold on, we're gonna get there. And then it was that night. He's like, it's 11 o'clock at night. They're like, and he texted me at 11 o'clock at night. And stupid me, I'm like, let me respond, right? And I'm like, go ahead and do it. In fact, Mark, go ahead and they've already got all of your information, right? Because they're your servicing company. Go ahead and do it. I want to see this. And I'll eat crow all day long. I'll go on my podcast and talk about it, about how you got this great deal and how I couldn't do it. I've been 26 years and I couldn't even get close. Yeah. And so he does it. And then he sends it over to me. And I'm about to show it to you. So he sends it over to me.
With permission, obviously.
Well, there's no names on here.
Yeah.
There's no names, nothing. I just want to show you how this company does business.
Yeah, okay.
So let's see here. Present. Share screen. Well, maybe I'm not going to share it.
Yes, you are.
Give me a second. When I move my monitor, that's why it's on this computer. I'm going to put it on a different screen. That'll help it. All right, here we go.
Okay. There are some benefits of being.
All right, you ready?
Yes.
Yeah.
Good. All right.
Make it big.
Is it?
I did, yeah.
Yeah.
All right. So they said, look at this. We can do it. Can you see my mouse?
Yep. You can see your mouse.
They're like, look at this. It's a 30-year term. It's a 5/6 arm. Wait a second. You told me you could give me a fixed rate mortgage. A 5/6 arm, which means that it's fixed for 5 years and then adjusts every 6 months thereafterwards. And the interest rate, by gosh, market's 4.99%. Now, if you guys know anything about APR, 6.268. The average consumer is supposed to know what this means, but they sometimes don't exactly. So they hit them with this. Here it is. I really got this. I can't show it to you because it shows the name of the company.
Wait, move up a little closer. There you go.
There you go.
It says you're going to save $1,200 a month because here's what their current mortgage is, and this is what it's going to go down to. Okay.
Mm-hmm.
Estimated mortgage, blah, blah, blah. So that's showing you the payoffs about $864,000.
Mm-hmm.
Does anyone see this number right here?
Yep.
Yeah.
That's not $31 and 332 seconds of a cent.
No.
How much is that?
$31,000.
$31,000 in closing costs. Oh, wait. Escrows?
It's not even all the closing cost?
No. Oh, and how much do they need to bring to the transaction to make it happen?
$7,000.
What a great deal, right?
No, so well, let me ask some like questions just to make sure I'm seeing this right. So they have to bring, wait, it went away.
I'm still away. I don't know.
6,900 to the table. But then they also had a escrow of 1,100 and they had closing costs of 31,000. So is the 1,100 and the 31,000 minus, essentially 7,000 cash to table. Are they rolling that into the loan?
They're rolling all of it, but the 7,000 he's got to bring to the table.
Great.
Wow, 50 grand. What a great deal. Mark, you want to advise them on that? They're gonna get that 499 fixed he told them about for 6 years.
That's a hard no.
Yeah.
And what's interesting is to the consumer, he's like, should I do it? And he's a very smart guy, but the way it's presented is the sizzle.
Yeah.
Notice what was at the very top, how much you're going to save. Look at your saving, $1,300. You're saving $1,300 a month. Well, maybe you should have been saving $2,200 a month. So I was able to do a loan for this gentleman, and I was able to do a fixed rate loan. What we decided to do was called, it doesn't matter. I was able to do a loan for this guy that cost him no money out of pocket, was very economical, and he's very happy with it. But what I learned about that company is they kept telling the people that's what they're going to get. I'm getting you a fix. I'm doing it for your neighbors. 4875, 499. But then when they show it to him, huh?
How can they truth in lending call it a fixed when it's not?
Well, it's not truth in lending until you put it on paper.
5 years.
What's that?
Or are they saying it's a fix for 5 years?
Yeah, there you go. It's semantics. It's car salesmanship. And that's retail lending for you in a nutshell. If a company spends $1 billion on marketing in 1 quarter, they want a return on that, and they're going to push their employees to get a great return on that. Now, I'll ask Mark. I mean, are they going to get a great return by undercutting the market on interest rates? No, it's impossible. No. They can't.
So has it got to be in their fees?
It is, which I just showed you. There's no truth in lending until you put something in writing. And by the way, what I showed you is not truth in lending. That's just an estimate. It's not until you get the loan estimate that anybody's held accountable to anything. On the phone and say whatever you want. You can say those things don't matter. Dodd-Frank made the loan estimate be the bar by which things are held. That's not a loan estimate I was just showing you. That's just it's just a visual marketing piece. And I'm here to tell you that this particular company, when I see them come up, I'm like, send me the LE because I can't wait to show you what they're really doing. So that stuff I was showing you, when they actually send the LE, it's probably going to be way different. They're going to say, well, dude, things went up a little bit. You should have acted that first night, or vice versa. Or things went up since that original mailing was sent you on February 5th.
Well, there's a very large company that deals with a lot of veterans and active duty that does a very similar thing, and they aggravate me to no end.
Yes, and they even have veterans in their name, I think, but we're not going to tell you.
Well, there's another one that doesn't have veterans in their name. They have our country in their name.
Yeah.
So
it is. I mean, that's marketing. That's, capitalism is I love capitalism. I like that you can have the three of us can have a widget, and you can say, this is a widget. It gets the job done. And I'm like, this is a widget. It does more than gets the job done. And then there's a third way. Go ahead, Mark. You wanted to say something?
Yeah, I think, listening to that example and what that company was offering that client, there's an underlying conversation here. The fact where and hopefully this gives people an idea of my mindset and where I go with things as a coach. There's a reason why he asked the question, should I do this? So I mean, in my mind, that has generated enough of a thought in his head to pause and ask, is this a good deal?
Mark, I don't even know if it's that, though, because I think it's that he has Lance, who he trusts to tell him the truth, to say, yes, it is. Because he might not even had a question about it, just said, hey, this is it. What do you think? Now, there might have been a pause.
I'm talking before he actually called Lance.
Mm-hmm.
There was something in his mind that said, is this a good deal? And so let's unpack that for a second. What is leading that person to look at what has been presented to them and say, over the next 5 years, this is a good deal, but my loan is for 30 years.
Right.
What is, in other words, I'm taking on 5 years, but I'm giving up 25.
Right. But the other
If
thing
you reverse the logic.
But the other thing we talk about all the time is that we don't usually hold them for that long. I think the biggest problem with this loan is the amount of money it was costing to buy down that rate so astronomically. And that
Right.
they're saying, this is great, this is great.
Right.
Because if it was less and you're holding it for 5 years, that'd be okay.
This goes to habits. This goes to a mindset. This goes to this benefit for 5 years is greater than what I'm going to have to deal with for 25 years if I was to hold this loan. So it's that impulsive voice in our head that says, if I can do this for 5 years and I'm going to give up 25 years. It's that impulsive thing that says, I'm willing to give you $1 I'll trade $1 in order to get 25 cents.
Yeah, I get what you're saying. The other thing, Lance, that I wanted you to kind of expound on from what you said is that, it's the listen to the actual words that I'm saying. They didn't say it was a fixed rate. They probably said it's fixed for 5 years. And that reminds me, I tell people often, take me with you to new construction. Not that new construction is trying to get one over on people, but you're sitting there and you're like, okay, we want this, this, and this. And you said that you're going to give us this free or included in the sale price because they don't usually come off the price. So we're going to get upgrades or whatever. And I'm like, if I'm sitting there, I hear what's being said. And then when the contract comes out, I make sure it's what we were interpreting it to say, not what they were actually saying potentially. There's a great book series I read, and it's called The Wheel of Time, and they say about the Aes Sedai, the truth you hear is not the truth they say. But talk about new construction a little bit too, because it is hard to beat them sometimes, but sometimes that's also not a loan that you want to hold potentially. Is it the same kind of a thing?
Well, it's a little bit of a white lie.
Mm-hmm.
I saw an article. I'm not trying to change subject. I'll come right back to it. But I saw a post online last night that said America's new trailer parks. And it was a photo of one of the largest builders in America and what their subdivisions might look like. I don't know, along 31A down through an area we know, Jennifer. And I was like, it's pretty damn straight on. This is an opinion. We have a very low quality mass track builder taking over Middle Tennessee, a couple of them. They're not the best quality homes. They sell them as a starter home. Jennifer has never said this to me, but other realtors have. They're barely getting past their first year without major issues, including structural things that are very scary. Yet the builder and many of America's largest builders, the top 3, own their own lending company. It's called a joint marketing agreement, a JMA. And in that, the builder is offering new buyers, as Jennifer is referencing to, as I bring it back now, is offering them absolutely insane interest rates compared to market. So this is step back a little bit, Jennifer, and the language has started to change in some of these contracts. I'm not earning them. I'm being put up against them and asked, what can I do? Which is nothing. Here's why. So I can educate them. I can educate them. I can't say you're buying a bad quality home. I can't say that.
Right.
I can talk about third blind party now because you have no idea who I'm talking about. But these builders are offering, hey, we'll give you, I'm making this up, a 3.5% interest rate, okay, fixed. And so how have they been able to do that? Well, some of these builders, Jennifer, as far back as 2020, 21, 2022, knew they were going to build a 500 home subdivision in XYZ, and they did what was called a forward buy. It's kind of like Southwest Airlines does, and they'll say, hey, we're going to fly this many for the next 10 years. We're going to fly these many flights. We're going to open up in this many markets. We know we're going to use 562 million barrels of JPA. And so they make a deal and buy it for that. Yeah, they don't take delivery on it, but they make a deal. Banks can do that too to builders. And so they knew they were going to sell these homes. Everyone on this call will agree that there are not enough homes. We have the biggest housing supply in the history since it's been recorded, and we're 30 years behind. Last week, Jennifer talked about for every home we have for sale, we have half that in buyers or something like that. It's like a 2-to-1 ratio, right, Jennifer?
Yeah.
Well, in the whole, people want to buy homes and people need to live someplace, but there's no place but apartments to live in. And so they're setting their own price. So builders knew this. This isn't new. They know that no one can catch up. So they're doing that's one way they can do it. They can do a forward buy. They control the money. They can offer the interest rate. Okay. Another way they can do is do a permanent buy down or a temporary buy down. And that's what's changed recently, Jennifer. We've gone away from seeing the permanent buy down to an ARM buy down. So they'll be like, hey, we're going to buy it down to a 3.5%. We're going to pay XYZ. And I think the reason that might be happening is that Mark can help with a little bit with this too, is that as fuel gets more, other things are getting more expensive, their margins are compressing. And even though they said, hey, we're going to set aside $30,000 in the construction cost of this home to buy down their interest rate, our labor went up. The cost of this went up. Maybe some things they couldn't forward control. So I've gone from seeing it being a fixed rate buy down to being ARMs. And even temporary buy downs, Jennifer, it's like a 3-2-1 or a 2-1 we've talked about.
Which we talked about. And as long as you know, like what we've talked about, and as long as you know what you're getting into, like had that loan that you showed not had 30,000 in buy down costs, it might have been an okay thing for him to do, even if it was temporary or even if it was an ARM. But what made it not a good value was the cost of it. You have to, your ROI, how much is it costing you to get what you need? And then what are you doing if it is a temporary buy down or if it is an adjustable, an ARM? What are you doing in the interim so that when it changes, you're not messed up, which is where Mark comes in.
Well, and Mark's going to tell the straight skinny, and I want to tell the straight skinny too. It's funny you brought that up, Jennifer. What would the rate been without the buy down? They never told them. It is beneficial. There are benefits. There's a key ingredient that you guys don't know that I left out. And when I say this to you, Jennifer's going to nod for sure, and Mark will nod in delay. He's coming off of a 3-2-1 buy down on a multi-million-dollar house that this was all paid for by the seller. He's now in the throes of the adjustment periods. He's coming up on adjustment period 3, which is going to adjust into the 7s. Okay. So he is motivated and he's feeling that pain of what was an expensive market. And it was paid for by somebody else originally as part of a concession. Actually, the largest concession I've ever gotten done. So,
interest only loans.
Good point.
Yeah, are horrible, right? Everybody says interest only loans are horrible. My ex and I, my parents were in a situation where we bought their home and we had to do it with an interest only. That was how we could do it. But that interest only is what saved me when I first got divorced. And I took that home in my divorce settlement because my payments were down at $700 for a 2,800 square foot home with 4 beds and 3 baths in Williamson County. And I knew when the drop date was coming. And I knew I had to get it refinanced, and I was pushing to get that. But that's the most important thing on any of these things is you have to know what you're doing, and you have to know what you need to do if you do it in the interim to get where you need to go. What are some of the other myths? We've talked about buy down rates. We've talked about builders. What about the what was the other one that I was thinking? Okay, here, is this a myth or not? You need 20% down.
That's a myth. Did you guys see me give my dog the evil eye? He was tearing something up, and he came over, and now he's laying next to me. I just gave him the eye.
I saw it. It worked. Yeah. So 20%.
Yeah, you don't need
20%
20% down, Jennifer. You can do a conforming loan up to in our county where I live, 1 million, very high. You can you can do a VA loan with 0 down. You can do an FHA loan down with 3.5%. You can do a conventional loan with as little as 3% down if you're a first-time home buyer.
Mm-hmm.
It was old wives' tales. What they said, it was what the bank said. You had to have this much equity. That's when banks ruled the world, and they're like, we don't want to make anything risky because we hold all the paper. Well, that's not how it works anymore. Mortgage notes are sold on the free market. It's something that if we wanted to get into this, the three of us could form an entity and we could buy paper and we could service paper if we wanted to.
So is the
the
20%
buyers,
down because the banks wanted the buyer to have enough skin in the game that they weren't going to just walk away? And
there
also,
was no
what's
risk.
the other thing that happens at 20% down? You
The
don't
mortgage
have
insurance.
to,
Yeah,
right. And again, that's a walkaway factor.
correct. But what a lot of people don't realize is that you can still, if you put down 5%, you could have mortgage insurance, but it's gotten very competitive. And it's like I had a 600 and some thousand, excuse me, $580,000 purchase that I'm working on this week. The borrower has 780 credit. They're putting down 5%, and their MI is $91 a month.
Oh,
So for them, yeah, so you roll your eyes. That it's gotten, what would that have been years ago, Jennifer? A couple $100.
for sure.
So it's gotten very competitive. So that person's like, wait a second, instead of taking, let's use if it's $1 million, instead of bringing $200,000 to the table, you mean I can bring 50,000 and have that money working someplace else for me? And guess what? Oh boy, I'm 99% fact check me everyone online. Mortgage insurance is now, because of the big beautiful bill, is now tax deductible again forever. It will never be undone. So that changed with the new law. That's a big deal.
And that's one of the things we talk about too. So let's just use those numbers for a minute. $500,000 house, and you're putting down 20% is what? 100,000.
10% would be 50,000, so 20 would be 100.
Okay. So instead of putting down 100,000, you put down 5%, and you take that 100,000 and you pay off the principal more quickly.
Yep. Or
That's a
invest it.
smarter way to use your money. Do you make your money work for you? So you don't have to have 20% down. Some situations where you might want to. The rates that you see may not be all that it seems that they are. What are some of the other, as a veteran, you have one of the companies that we were not naming. What are some of the other ones that you hear?
Did you say as from a veteran's point of view?
Yeah, I said from a veteran, you may or may not be most beneficial to use one of the big companies that markets hard to veterans.
Right. So one of the things you'll hear, especially with refis, is you'll skip a payment, maybe skip two. That comes along the lines of free. Go ahead, Mark.
Lance, one of the things, this may not be within the scope of our conversation here, but it is something that constantly comes up. And in fact, I just had another client talk about, actually not a client, friend talked about it. The escrow analysis and how escrow changes from 1 year to the next. And they're not small swings, they're wildly inaccurate swings. And how can a person get on top of that? It's ridiculous. This person explained to me that their payment, their fixed rate payment now is going to go up $225 because the company failed to accurately project what the escrow shortage or what their needs for escrow would be.
So what is your escrow, Mark? It's taxes and insurance.
Yeah.
So your taxes get involved in politics.
Right.
And your insurance, if your insurance is jumping like that, get a quote for different insurance. Make sure that you're doing a multi-policy discount.
Sure.
And see where your deductible and everything else is. I think I told you there's a new, like it's a rider, it's a separate policy. It's kind of like an AFLAC for roofs where you can buy if your roof deductible, if you're raising your roof deductible and it's like 20,000, you can buy for a couple $100 these Aflac kind of, that's not the right word, but like these gap policies that pay you out specifically for your roof, and they don't cost hundreds and hundreds as much as a higher deductible would a month. But and then if you talk about the new construction, there are some major lawsuits where they were doing the property value. We've talked about this assessment based on raw land, not the finished house. And so the first year in, they're getting a jump because they inaccurately estimated that. But the ones that you're talking about are coming from the increases of property value, raising taxes, tax base rates being raised, and insurance rates being raised because the pool of insurance money has been decimated with a lot of catastrophic events. I mean,
let's clarify what it is. What are you talking about, Mark, specifically? What this particular person? You said that they're just changing it willy-nilly. Is this a particular person told you this? A particular client?
So the scenario is this particular person who is now facing about a $250 increase in their mortgage payment because they escrow. They did the company did an analysis, a yearly analysis of their escrow, and found that it was short by about $2,100.
Yeah.
So maybe $2,200. So when you divide that by 12, it's basically $200 to $225 difference on their mortgage. What that does, that can have a ripple effect on their budget. And now they're all of a sudden going, my mortgage payment is $2,000 where it used to be $1,750.
Yep.
And so how can that question came to me of, why is my mortgage company doing this? I thought I had a fixed rate and that it was going to be this amount. And then they're finding out, oh, I didn't know that there's analyses that are done every year and shortages are changed. I thought my mortgage payment was always going to be the same amount.
Let me address this, Jennifer. So there's two things that could have happened here. Number one, I'm going to ask you a question and I'm going to answer it. How long has this person owned this house?
I think they're on their 7th year, 6th year, something like that.
Okay. So the person I was telling you about a second ago, the company I wasn't mentioning, they had the $40-some thousand in fees. Another thing that's left out that company didn't know about and didn't pay attention to, and I figured this out when I started to work the loan. That person I'm talking about, his Davidson County taxes went from $5,500 a year to $13,250 year over year. Okay. Wow. $8,000.
That's the property tax increase I was talking about.
Yep, that's 1 year increase. Now we had this happen in Nashville back in 2020, and I'll jump forward to the customer. Last night I called him and asked him if he realized this, and he didn't. Okay, and the other company didn't pay attention to this either. However, they've already adjusted his payment, which is what Mark's speaking to. So I want to talk about this twofold. Number one, back Jennifer referenced this. This is happening big time in Texas, Mark. These two biggest home builders in America are under the number one home builder is in a huge lawsuit that the feds are on the edge of looking into. And that is that they are underestimating on purpose the new taxes of a property. So I don't know from memory what Texas taxes are, but I'm going to use here. So here in Middle Tennessee, a starter home where I live is about $500,000. The taxes on that house are going to be, I'm going to call it $2,400 for an example. It would be $200 a month. This company that owns their own lender and their own title company was saying, well, I think it's going to be $1,200. And that $100 difference a month in payment, what was helping make or break if the buyer was actually going to get into the home.
Their ratios, right?
Yep. Right. And so they're under investigation because at the end of the first year, the houses are done. In came the county, did the tax assessment. And here's what happens, Mark. And this leads into the second way to answer this question for the person that's been in there for 7 years. The county assesses it. Then they look in the rolls, the recording rolls of the county on all the deeds of trust, and in the deed of trust it says who the mortgagee is, who is the person getting paid, who made the loan to XYZ. Is it an escrow? So when they get the tax bill, they send a courtesy copy to the borrower, okay? And they send the bill to the mortgage company, okay? The mortgage company gets a bill, okay? They immediately pay it. They don't look at it. They don't try to see whether it's true or false. It should be true. And sometimes there are egregious mistakes, but very rarely there are. They get this bill. They pay it, and they immediately send a notice to your customer, Mark, or the new home buyer, right? And that notice says, and I worked this up while we were talking, okay? So let's say you used the $2,100 a month. It went up. So I figured it out. Whatever it was went up $1,050 a year. It could have been their taxes through. It wasn't, because your person lived there 7 years. So if you said they just bought it last year, like, oh, that might be one of these. This
But they
might be their
reassess
tax
every 2
assessment.
years. But they do reassess property value. In Tennessee, I think it's 4 years. In Ohio, it's 5. So it could have been one of
Right.
those
It
years.
could have been a tax assessment, or it could have been insurance. Insurance companies change things all the time, and you have to shop and pay attention. Either way, they sent a notice. Both of them did. And we sometimes miss it as a consumer because, like, oh, my stuff's in escrow. I don't need to pay attention to it. So here's what happened to your borrower, Mark. And I want to defend the banks a little bit. They're not willy-nilly doing it. They're playing by the rules. And then once they're corrected, the reason they pay it is because if they don't pay it, the tax lien always wins. So if they send a county tax, the county sends a tax bill and the mortgagee doesn't pay it, then the county could come back and slap a lien on it. Okay. And then the tax lien is always between the lender and the house. They'll never get the money. We should have one of those people on, guys. One of those people that buys houses on the county steps.
Yeah.
It's a very interesting business. So the difference was $87.50 a month. Okay. When they send your bill to your customer, Mark, they send them a bill for their mortgage payment is actually increasing $175, because here's what they're doing. They've already paid out the extra $1,050. They got that bill, so they got to recoup that immediately. But now they're thinking, wait, the escrow's gone up, so I got to get that for next year as well. So it looks like it's doubled. It looks like it's wrong. But what most of us don't understand is they're just going to do that for 1 year to get their money back. At the end of that 1 year, they're going to drop it back down. And they sent a letter to the borrower, and I've gotten one of these before, where it went up that says, you can go ahead and we've gone ahead and paid this on your behalf. If you'd like, you can send us a check for $1,050, or we're going to raise your payment. And that's usually when the red flags go off. And so I wanted to speak with that. It does suck. And the best way to is read your mail. The best way to pay attention to is read your mail. Call your loan officer. All my people, that happens all the time. They call me. I explain what's going on. So that gentleman I was telling you earlier that went up from 5,000 to 13,500, he can go contest that. So we're going to do an appraisal with the refinance that I'm doing for him, and then he's going to be able to take that to the county and fight.
Yeah, I'm glad that you spoke to this, Lance, and that's a really great. I clearly understand, and now I'll point him to our podcast for that explanation. But the overall effect for this person is it's affecting their business, or not business, but it's affecting their personal finances to the point where now they're slower in paying off their debt because it's $250. It's either that, or they're going to have to come up with $2,000 to pay it in order to keep their payment right.
Right. It's like they went out and got a small car loan or bought a whole house full of furniture, but they didn't do that.
Yeah, they didn't expect it. But thanks I know we're 53 minutes in. That explanation is fantastic. I'll be able to point them to this now. Yeah,
it's always taxes or insurance.
And Jennifer talks about that when she interviews people and does her initial consultation. The mortgage is going to be fixed, but you got to pay attention to your taxes and interest. Notice how quick she's able to rattle off how fast we do an assessment. Those are things we're telling people up front. This isn't your forever payment. It could change, but I'm always marking. Any of your clients, wherever they're at in the world, can call me and I'll talk them through it.
So I'll do that. I'll suggest that to them. So a person could actually, to take this one, if you wanted to find out that ultimately what led to the increase in the escrow or the shortage in the escrow, you could call your insurance company, ask them what was the cost difference between last year and this year along with checking your county taxes, your local taxes from the assessor's a complimentary form that they send to you of the county tax assessment.
And you can talk with your insurance agent, or there are things I can modify to make my cost more more reasonable for me. The other thing too, and this is not going to apply to everyone, if you want your mortgage payment to stay the same, then at what point do you not have to escrow taxes and insurance? Because you can pay those directly, but those bills are going to fluctuate, but your mortgage payment would be the same. But like FHA and some of these others, you have to escrow it because they don't want to be selling these houses on the courthouse steps.
Right. Yeah, I think that's a great, I appreciate you diving into that. I don't know if it was more of a myth or not, Lance, but I think as you were talking, that scenario triggered for me, and I thought this is a great opportunity to bring that up.
That's great. Straight right into it. That's hopefully we'll get some good AI off of that. I'm happy that I'm confident enough and understand enough to be able to explain it.
Yep. All right, I got to run away, y'all. I got to go get oil changes.
Yeah.
Great call today, guys. I hope everybody has a great weekend coming up. It says it's supposed to rain every day here. It hasn't yet. I'm sure I'm going to pay for that this weekend.
It's headed your way because it hit us about 3 o'clock in the morning. So it's headed your way. I hope everyone has a great weekend with Easter coming up. I hope everyone has a great enjoys the weekend.
All right, we'll end the recording right now.